After 3 years of higher interest rates, we're now entering a phase when mortgage costs are falling. How can real estate consumers get the best out of the new situation? I'm Ryder, and the Property Playbook starts now. Welcome to the Property Playbook, presented by Hotspotting, where with each episode we empower you with expert insights and trends to thrive in today's competitive property market. So interest rates started to rise in May 2022, and there were 13 separate increases by the Reserve Bank until November 2023. Now, after more than a year of stubbornly high borrowing costs, we're in a new era with the RBA cutting interest rates for the first time. But how can property investors get the best out of that new situation? Today I'm joined by Thomas Tang from Ausun Finance, the nation's #1 mortgage broker, MPA 2024, to discuss how you can benefit. So Thomas, welcome.
Thanks, Terry. Terry's my mentor.
Thank you, Thomas. Look, I think it's true to say that many borrowers, when they're taking out a loan, they focus very much on getting the best, the lowest interest rate on their mortgage.
Yeah.
But they then neglect to review it later. How often should investors check out the rates to ensure they're still getting the best deal?
Well, my recommendation is that you should review and revisit your interest rate every 6 months.
Yeah.
And if you tend to have a habit of speaking to your broker or bank's retention team every 12 months, then they will usually lower the rate for you. So it's called repricing, and there's a lot of new fintech software out there that empowers brokers to do the automatic repricing for their customer. Without fees and charges, without looking at their new income, they don't have to provide anything. So it's very hassle-free, but most people only focus on the interest rate when they buy the property and then forget about the loan forever.
So a good mortgage broker will be keeping an eye on your loan and perhaps advising you that there's something you need to be aware of?
Yes. So if you actually ignore your banks forever, what we find is that every year they increase the interest margin by 0.3%. So if you ignore your banks for 3 years, then you're probably paying 0.9% around that mark, higher than existing new clients.
Sure. So that speaks to my next question, really, because major banks typically offer the best rates to new customers rather than long-term borrowers. And some borrowers, rather foolishly, I think, are loyal to their bank, and I think they call it a loyalty tax, because the best deals are often to the new customers. So if you don't review your loan and years go by, just how much can your interest rate increase compared to what you could be getting if you're getting the best rate?
So a good thing about the bank industry now is also they cut out a lot of cashback offer, which make less incentive for people to refinance every year or two. So that leaves the consumer maybe better off to stay with the same bank but retain at a good price, but just don't ignore it.
Okay, so if you let your loan go for a year, you could typically be paying, what, 0.3% more than
$1 million loan, every year you're paying $3,000 more if you don't review it. And we'd love to help you save interest, and then you can use that money to reinvest in your knowledge, in your property community, on your lawyer's review fee, better accountant and all that, and save a lot of other money.
So on average, how long do borrowers normally stay with the same lender?
From one of the Big Four's report, the mortgage, 30 years mortgage, stay within the same lender for 7.5 years, if they are banks. Non-bank usually less than that.
So if you're not doing regular reviews of your interest rate and seeking better deals from your bank, or perhaps refinancing with another lender, then you're going to be disadvantaged.
So surprisingly, running to friends at barbecue, he didn't review, one of his mortgage, even though it's small, $500,000 for 5 years, and he's paying 8%, but where most investors paying, 6.3, 6.4 now. So
just a rough calculation, how much extra was that costing compared with what he could have been paying?
You're probably looking at 1.5% or more, so he's paying $8,000 more per year.
So definitely it makes a lot of sense to regularly review, but it means that one of the things we often say at Hotspotting to people is before you build your property portfolio, build your team. It's important to have a team of expert consultants and arrange if you're a good accountant, for example. But having a good mortgage broker on the team is probably an essential part of the team that people should have before they get serious about property investment. I definitely agree with that. So 10 years ago when I quit my job from the bank, only 30% of the mortgage is written by brokers or serviced by brokers. But as of end of 2024 last year, it's 74.2%.
by mortgage broker. So it's changing the whole landscape of the market.
Yeah.
But unfortunately, mortgage broker is a very lower level of entry, only certificate for 2 days or 2 months you can get a certificate without any industry background. So there are a lot of cowboy players out there. As much as I love this industry, so if you look at the stats, 20% of the mortgage broker out of the 20,000 mortgage broker do 0 deal a year. So they have no experience.
Okay.
And then more than half of them only do it like on part-time base, which means they don't have real experience. So yes, interest rate is important, but good mortgage brokers should also have the control over the process, have good relationship with the lenders, negotiate a better deal, not just the rate, but also look at holistically the whole loan structure, how this borrowing ownership will affect your tax, your asset protection, your future borrowing. So there's a lot of consideration into it. We cannot give you tax advice, but we shall work with your other team in the professional team members, like buyer's agent, like accountant, how this loan product or channel will affect their decision making with other team.
Okay, so you mentioned that there are a lot of people out there that aren't necessarily great mortgage brokers.
Yeah.
How can a consumer ensure that they're getting a good one?
Yeah. Look, if you're only buying 1 or 2 property for the whole life, then it doesn't matter who you go with. Just negotiate the best rate. But if you have the ambitions to build up a property portfolio, then you should really select the broker carefully. So there's a 20+ questionnaire that I list out on my website. I'm happy to share. So basically, they need to be very, very experienced. They need to have a lot more properties than you, hopefully, or they're looking after a community or few property investment community where they deal with complicated loan structure a lot, rather than you are the first time they're doing this kind of deal.
Yeah. So for me, one of the biggest reasons to have a mortgage broker on my team is that there are so many lenders out there now compared to when I started out many years ago. So many mortgage brokers, and the landscape is changing almost daily. I can't imagine how any average consumer could keep up with all of that and understand the nuances. It seems to me that's the best reason to have a mortgage broker on the team.
Even the mortgage broker will struggle. So the good mortgage broker, they're always busy and they work together. So we work with a lot of other good mortgage broker in other company. We exchange our ideas, we exchange the information to give the clients a better deal.
Yeah, we've just actually had an interest rate reduction, the first one I think in 5 years.
Yep.
Great news for everybody. I guess that makes you a little bit more busy with your clients.
More inquiry coming to the door, yes.
One of the things that really surprised me with this interest rate reduction this week was that there was very rapid reaction from the major banks. I was notified by my lenders the same day that my interest rate was about to drop.
Yes.
Now, I haven't seen that before, that rapid response. Lenders are usually pretty quick to put up interest rates, but very slow to bring them down. Why are they reacting so strongly and quickly this time, do you think?
I think a lot of banks are struggling to give out the money. They have a lot of money in hands, and they also worry about clients' retention. Even though they stopped, most of banks stop cashback rebate for refinancing. So that's also another reason they try to keep their clients happy, not to leave. So very often that we help the clients to do a refinance because the previous bank not looking after them, and then we got the loan approved, sending the discharge form. So this time is serious, we're leaving, and then the other bank can come back and say, hey, we now give you $2,000 cash back. If you stay with us, we're going to match the rate. So the banks are trying to, if they're not looking after their banks, if the banks are not looking after their customer, and I believe the broker's doing a good job, that they make the banks fair, and then they start to investing more money in looking after their existing clients. Yeah.
So what should the average lender, borrower rather, consumer do if they feel they're not getting the best deal from their current lender? Should they go to them first through their mortgage broker and say, I want you to give me a better deal?
Yeah.
Is that the first step? And then if they don't get a better interest rate, then refinance perhaps?
If you have a good lending manager as well, they should be able to give you a good retention rate, but a good lending manager also very busy. They have a big portfolio to look after, and that doesn't tie with their KPI. So that's why they have less incentive, and also there's a pricing team above them, so they can do less. They can only do so much. But if you have a good mortgage broker, they can compare for you. So how do you know your rate is good or bad? The clients will always feel their rate is not good, even their rate maybe below average. So you have some benchmark, you have some evidence, so that help your negotiation. So if your broker can do the negotiation for you with the retention team, you may save time and save money as well.
Okay. So can you see a mortgage broker as kind of a free advisor if you're looking?
I also sell that benefit. If I'm not a mortgage broker myself, I'll use a good mortgage broker, because think about this, they have a lot of data, they have a lot of economics behind them if they do attend those training organized by the bank. Because look at Big Four and a lot of other banks, they publicly list the company. You're not paying a fee upfront for most of the application. You know, you're paying interest, and then the broker get a trial. So the broker should provide you ongoing advice, and the broker should attend the bank's training ongoing to keep update with the market. And the bank's report on the valuation report for each property, their opinion on what commercial property or what state or what if Sabah to get into. So that risk judgment is a hint for the property investor of where to invest next. Like for example, during COVID, warehouse is very hot. You know, the medical industry is very hot. Queensland is very hot. WA is very hot. So the banks also have that data as well. So use a buyer's agent and also use your knowledgeable broker will give you a lot of evidence to make the sound investment judgment.
Okay. So you mentioned buyer's agent. They cost a reasonable fee. Well, how much does a mortgage broker cost the typical consumer?
So for a vanilla deal, we call vanilla deal a very simple deal. We actually charge clients nothing, or we may charge them a small commitment fee. $600 to $1,000 deposit, but it can be refundable. But if they want more service and more advice, we actually quote them for our service. But for commercial loan, you're paying anywhere between 0.25 to 1%, so a few $1,000s to start with.
So there's differences there between residential lending and commercial lending.
Yeah, residential complicated transaction, you can also pay a fee, like self-management super funds. You're buying under residential property, but under self-managed super funds arrangement, so it usually come with a fee as well.
Okay, so just referring again to this week's interest rate reduction by the Reserve Bank, very welcome after 5 years of that not happening. What should people be doing right now, people who have mortgages?
Well, I think you should have a finance Saturday morning with your wife or your husband, with the family, and also with your teenager kids. Pull out all your bill, you know, all your mortgage, credit card, and energy bills, and then start to review and call each, you know, of the competitors or brokers, and then start collecting the facts, and then see where you can move and how much you can save, and then play that as a game. And then you reward your teenager kids if you help the family to save $1,000, and you can split half with the kids. And do the exercise every 6 to 12 months.
So make it a family exercise.
Make it a family exercise. You know, talk about money on the dinner table, lunch table.
But it does sound like a lot of work. Obviously, you want to also call your mortgage broker and bring them in, and they can tell you whether what you're receiving from your current lender is what you should be getting. Yeah.
And I love to help my clients save money, you know, every dollar count.
Okay. Yeah. So could we just go back to some of those figures you gave us previously? I think it was in the past only about 30% of loans were from mortgage brokers, but now it's what is it, 70%?
74%. It's actually climbing up. It's getting more and more. You probably see this very clearly. A lot of bank branches being closed down, especially in the suburbs. You probably only see a few in the CBD or big shopping center, and the clients don't have enough good experience with going to branch or bank direct. And I think we should really open more branches for service, because now my clients complain they go to a branch without appointment, they can't see anyone, they can't speak to anyone. Yes, the banks as publicly listed company are trying to cut cost. You know, they reduce the fixed cost, they outsource, they make it IT, make it automated. But people, when they're dealing with most of their family, this is their largest debt and largest asset. They still want to speak to a real human to assist them with make a decision. So one of the bank, ANZ, is very smart. We encourage that. They open a branch, not for KPI, not to sell any saving account, any credit card. It's in Cheston Shopping Centre, just to do service. You come in, we teach you how to use internet banking, we fix everything up for you, rather than you should go away, you should go home, you should speak to your broker, you should make an appointment, you should just do the phone call and kick them out and kick the ball.
Okay. Okay, Thomas Tang from Ausun Finance, thank you for your time today.
Thanks, Terry.
That's the play for today. This is Ticker, and we'll be right back.
You're watching Ticker. We'll have more in just a few minutes.